time for our Ask the Expert, and today featuring United FCS experts in studio. We welcome Lynn Johnson back. Lynn, we haven't seen you for a while. Thanks for coming in today.
Thanks for having us, Bill.
And Lynn is an insurance specialist with United FCS, and also James Just, or we like to call him Jim, if that's all right, Jim.
Please do.
Vice President with Financial Services, and I suppose maybe the last time I saw you, Jim, was out at the dairy broadcast.
Yes, last summer out southeast of Wilmer there, yep.
Right, and I know you were out when we were in the Kirkhoven area, too.
Yep.
So, well, I understand we're going to be out in the new dairy at Pennock, the new Meadow Star Dairy.
That'll be fun.
And a little different time of the day. I think it's going to start like at 4 in the afternoon or something till about 7 or something that night. So
good.
Well, we can see some bare ground out there in some of the fields. We had a little bit of melting, and then I know we've gotten these little dribs and drabs of snow. But I suppose farmers are busy preparing for, they've been going to meetings and so forth, trying to find out what's the latest in agriculture and so forth. What do you hear at the office from some of your producers?
Yeah, we're hearing, guys getting geared up to get going in the spring, doing a lot of meetings. I think we had a crop insurance meeting here a couple of weeks ago, which was very well attended. We like to present some new information on crop insurance as well as other topics, marketing and just the general farm outlook. Mm-hmm. So they've been busy doing that. Used to think it was just busy in the production months, but in today's world they have to do a lot of planning in the wintertime to make sure that the production year goes well.
Right. And yet one of the trump cards is what kind of weather we're, going to be either blessed with or cursed with, I guess you might say, depending on what, what's in store. And that's where I suppose crop insurance, it's one of the areas that comes in to try to minimize or even out the risk a little bit involved in, a very expensive endeavor when it comes to planting crops. I mean, it's...
Yes, for sure. The cost of production nowadays, it's almost too much of a risk to bear without some type of management in place to take some of that risk out of the equation.
Mm-hmm. So. What is the status now? Do farmers have to participate in the farm program, or do they still have the option if they choose not to, to put it all kind of on their own plate, so to speak?
Yeah, they still have the option to not participate, but I think with, especially in the current environment, with the ARC and the PLC, I don't know of any that really do not participate, to be honest with you. You know, it's kind of a little bit of a safety net to be involved in the farm programs, too.
Right.
So
what do you see then? Are people signing up again, Lynn, would you say, or are they waiting a little longer, or is there any advantage to waiting at all, or is it something to get done with if you can?
Well, we've started our appointments already now here, probably going full force last week. We start scheduling them out. We got till March 15th is sales closing. But I've already got a few people that have come in. We track the price through the month of February. It's December month of the Chicago Board of Trade. So we're tracking the price right now, and currently the corn is at $3.88 and soybeans at $8.85. So it is a lot lower than it was last year. Corn last year came in at $4.15 and soybeans was $9.73. But we need to start in February meeting with the customers so we can have a chance to meet with everybody before March 15th. And even though, we got till the end of February for the tracking period, I don't see it fluctuating a whole lot, so we can still give them a pretty good idea of what their coverage is going to be.
So is that a specific day then? Is that the price you use then, whatever day you actually sign up? Or
No. Mm-hmm. It'll track it through the month of February, and it's the average over the month. So once that price comes out, that's the price everybody will get.
Okay.
Yeah.
So explain that then. If there is a loss, is that what you can get then per bushel based on your yield, or?
Yes, if you take the revenue protection, you're guaranteed the higher of the spring or the fall price. If you just take yield protection, you're only guaranteed the spring price. So with the spring price at, let's say it ends up at $3.90, you'll have a trigger yield, and if you fall below that trigger yield, you're guaranteed that $3.90 price of corn. If the price comes in, let's say, lower in the fall, which we hope it doesn't, but if it does, then it'll increase your trigger yield so that it takes more bushels to get to your dollar guarantee.
Farmers go through a pretty rigorous method of producing or providing records to show what their production averages are, Bill, and then they get what they call as an APH or a proven yield, and then they can take certain levels of coverage based on that proven yield. Say you had a 200 bushel yield, average yield, and you wanted to insure at the 75% level, well, then you're guaranteed 150 bushels times that spring discovery price of $3.88 or $3.90, whatever it might be, and that's your guarantee per acre. That's the way they calculate the guarantee per acre.
I see. So that's it. It really has evolved, hasn't it? Then through the years, the whole idea of the crop insurance.
It keeps changing.
So where do the funds come from then? I mean, is it just from premiums, or does in some cases the government have to back this up in case there is a loss? Or
the companies are backed by the government, but the premiums, and if there is more losses than the insurance company can handle, it is backed by the government. So
the government subsidizes the premiums.
Right.
For the farmers.
Now, United FCS, can you write for multiple different companies then too, or do you? I mean, does it vary by producer, or explain how they decide who to go with? I guess too.
Yes, we do have numerous companies we write for. We actually have like 6 companies. We write for RCIS, NAU, Farmers Mutual, Great American, ProAg, Rain and Hail. And it kind of depends on, a lot of times, too, they look at hail insurance. We try to package it to which would be the best option for that farmer, I guess. So, because multi-peril, the rate's the same no matter which company you take. But with hail, the prices vary by company and their endorsements vary by company. So I kind of look at the whole package for the customer to see which is the best fit for them.
Have we found through the years that some areas of our, like even county or area here, region, are more prone to having hail more often? Or are there some of those areas that are higher risk, I guess?
Yes, you can see the ones that normally get hit by hail. You'll see the rates are higher for that township by county. So it does. You can definitely tell, from one county to the next, that there's some areas that are more expensive because of their history of having quite a bit of hail.
Yeah, it's amazing. You watch that, and it seems like one area will get hit several years out of 10, and then all of a sudden that area doesn't get hit, and another area gets hit. But overall, you can pretty much tell, like Lynn said, by the premium for the hail coverage on the township as to whether it's a high-risk township or not. Right.
Now, multi-peril is wind, and what are some of the other things that you're insured against then with that?
Pretty much all natural causes. They won't cover spray drift. If a farmer sprays his field and drifts over to your field, the insurance won't cover that. That you'll have to go back to that farmer and to have his farm liability or whatever pay you for that. But for most natural causes, wind, hail, drought.
What about insect? Damage like aphids and things like that. Does that get covered at all, or?
Yes, that impacts your yield, and anything that impacts your yield from a natural cause is pretty much covered under the multi-peril. So, if you get, corn borer infestation, and a lot of the plants tip over and are unharvestable, that's going to impact what your yield is, and once again, you're guaranteed that certain amount of bushels. So if it falls below that, they do pay.
So that could enter into what treatments you do, too, I suppose, depending on if it's a lighter infestation or whatever, or if it's something, because I guess some of these things aren't that expensive to treat, but they have to be treated multiple times in some cases. So
one of the provisions is you have to use good farming practices, though. You can't just so to speak, farm to crop insurance. Say,
come in and plant in July and expect to
exactly.
get a full crop, that type of thing.
Right.
So
and that leads into Lynn's got some dates that
as
far
that's
as planting and such
right.
too.
You can't go in too early either, can you? Lynn?
Correct.
So.
Yep. And I think, everybody's probably anxious with the way the weather is, that they're probably thinking it's going to be an early planting season, depending on what the spring brings. But the initial planting date for corn is April 11th. Soybeans is April 21st. Wheat is March 21st. And sugar beets are April 11th. That's just some of the dates. That does not mean you can't plant before that date. But if you do plant before that date, you will not get paid any replant claims. So that is the catch there. If you plant too early and you need to replant, you're replanting at your own expense. So if you plant on the initial planting date or after and you need to replant, then it's covered, but you need to have 20 acres or 20% of the unit to replant to get paid on the multi-peril.
I see. So does that vary from year to year, those planting dates, or it's pretty much been this for a while now?
Yeah, they're pretty standard. They don't fluctuate.
Mm-hmm. Now, last year, as I recall, quite a bit of the crop got in early. It seemed like right around the planting date, or within a week or so of that.
Yep.
So,
it was.
Last year was early.
Yep.
And then there's also
final planting
dates
date.
too. And Lynn can go over those.
So the final planting date on corn is May 31st. Soybeans June 10th. Wheat May 15th, and sugar beets May 31st. So if you plant after the final plant date, then you're into a late plant period where you can lose 1% of guarantee per day if you plant after that. There is also optional coverages you can buy. You can buy an optional replant policy that'll take away that 2020 rule I was talking about, and it'll pay at acre one. And then there's late plant insurance also, where it'll pay up to take away that 1% of guarantee loss for 10 days after the late plant period.
what about when we hear of prevent plant? Because I think there were some acres last year, not around here that I'm aware of, but in further south that they had, maybe not as much last year as 2 years ago. We had quite a bit of it, it seemed like, in McLeod County and not too far from here. Is that covered at all then when you don't get a crop in at all? Or
Yes, long as it's prevent plant is paid if it's for the, it's similar in the area. They're not going to pay you if everybody else got their crops in and you didn't, but it is paid also on the 2020 rule where you have to have 20 acres or 20%, and then it's paid at a reduced guarantee. You usually get paid 60% of your guarantee. So a lot of people, if they they'll still try to get it planted because it's not as much of a, good guarantee if you leave it go to prevent plant.
Jim, you touched on a little bit right out of the gate talking about marketing, too. How does crop insurance factor into that when you're looking at your overall marketing plan?
Well, we think we feel it provides a safety net for you to be comfortable in marketing a certain amount of grain. Say we talked a little earlier, too, about a 200 bushel proven yield, or APH. If you insure it at the 75% level, now you're guaranteed 150 bushel per acre. So you can feel comfortable going out and marketing up to that guarantee of 150 bushel per acre. Say you've got a break even of $3.50 or something, and you've got that 150 bushel guarantee. You can, if the price during the year gets to that point and you haven't produced a crop yet, you still can feel comfortable marketing at that 3.5 or your break even, because even if you have a short crop, that you're guaranteed that 150 bushels. So you've got something there if you are short to go out and buy back the contract or fulfill the contract by buying grain again to do so. Yeah,
because you don't want to be left short, do you?
You don't want to be left short. That's right. Yeah. There's some horror stories about being left short when they've overmarketed,
Right.
We obviously we don't promote speculating, but we think combining your crop insurance with your marketing plan provides a risk mitigator there also. So,
do most producers now kind of market throughout the year, or how do they set that up normally? Is that to try to catch, you're bound to catch some of the highs, and you maybe don't get all of them, but
yes, a lot of producers put orders in at what they figure is a break-even level, or maybe a level that allows them some profit. They put those orders in and hope they get filled, or if they watch the markets, and if it gets to price where they can show a profit or there is a profit margin, they'll sell a certain percent of their grain at that level and then, wait and for another time when there's maybe a spike in the market and market some more. So, yeah, I think marketing is key going forward. I think it's key producers know their break-even costs. That gives them the basis to know where they should be to start marketing. Mm-hmm. Unfortunately, in today's environment, sometimes it's hard to get to that level, but at least and you can protect yourself at break even or even if it's a little below, at least you've got some protection there to limit the loss, so to speak.
What's the feeling this year? Is the cost of production maybe going to be a little less than it was last year? I mean, it seems like the energy prices are down a little.
Fuel is going to be less, no doubt. Mm-hmm. And a lot of producers have already locked in their fuel for the year. Fertilizer, we've seen some, downward pressure on fertilizer prices. So it's going to be, production costs are going to be a little less. Rents are still being pressured a little bit. Mm-hmm. Probably not so much of a pullback in those, although a lot of discussion going on in that area too.
Yeah.
I think you're right in your assessment that it's going to be a little bit less,
but probably not a significant amount.
Not a significant amount, and probably not enough to have break even at $3.20, which I think is what the cash price on corn was today. I think futures was, for fall delivery maybe it was a little higher than that $3.40 or so. But
Yeah, you think back, how these costs have, gone up through the years. There was a lot of wet corn, for years sold at $1 or a little over $1 a bushel, and yet they were able to stay in operation. Well, nowadays it's, even though the yields keep going up, it just seems like you really have to have a lot more for it. And fortunately, there is good demand. Whether it's, I know last year with the turkey situation, I'm sure less bushels were used,
yes.
But hopefully we won't see that happen again.
Let's hope not.
This go around. But so, Lynn, again, maybe some important dates for farmers to keep in mind. I'm sure. They realize this is one of the things they got to take care of. But again, as to when to make their appointment to come in and visit with you and get this all taken care of.
Yeah, sales closing is March 15th, and we'd be very happy, if you want to come in, talk to myself or Sandy Scheffler. We would sure take a look at your existing coverage and make sure that you're getting all the discounts and all the best coverage that would, suit your operation. And you can contact us at 235-1771 or 800-450-1771. Or you can stop in. We're at 4401 Highway 71 South, right next to Arnold's.
Yeah, beautiful location it looks like there. And
yep.
And so good to see both of you again. We'll keep our fingers crossed that we can duplicate the growing season we had last year, because that was about as perfect as I can remember. So
don't get too many better than that. That's for sure.
I don't know what the odds are of being able to have another one, but let's hope for it anyway, for the very best from the weather too.
That was kind of our savior last year is the good production we had.
Even though the price was low, at least they had more bushels to work with.
Yeah, no, that's for sure. It's better than low prices and then a short crop.
Yeah.
All right. Well, thank you both again for coming in today.
Okay, thank you, Bill.
All right. Lynn Johnson and Jim Just with United FCS here in Wilmer, and our guests here on Ask the Expert.